good evening, good afternoon, depending on where you're watching this video from. My name is TradeX. Welcome to Phoenix FX Trading. Well, today's topic is quite simple. Today's topic is gold. All things gold. Now, before I can get to the main topic at hand, if you are new to this channel, please be sure to subscribe to this channel. Click the notification bell so that you get notified every single time I upload a video. Like this video so that it gets recommended to another person who might be in need of it. So yeah, this will definitely be keeping me motivated to be posting free stuff, because the channel will be growing and I'll be reaching a wider audience. So if the channel does not grow, man, like, you get the picture. So the offer's still on the table, guys. When we hit 100 subscribers, I will be personally handpicking 10 of you to join my program, my mentorship program, for an entire week, absolutely for free. And that's where you'll get to be asking me free everything, basically trading related, price action related, and I will be answering you guys for absolutely nothing. Like, it's gonna be lit. So you'll be literally in my VIP group and you won't pay a dime for an entire week learning, and you get to ask as many questions as you want absolutely for free. So be sure, let's blow this channel up, because it's basically here to help a lot of traders out. So without wasting any time, let's get to the topic at hand, the task at hand. Right, gold. Now I want you guys to know, just when you approach Wyckoff, you have to be patient. Patience is the key in this game, because there's no point in like being stopped out every time you say you try to enter the market, and because you're impatient you can't even catch the bigger moves, you understand? So patience will be like it'll be like your next level type of thing, man. Like, just patience is like key, especially when you're approaching Wyckoff. So be sure that you do not force trades when the setup is not complete. That, my friend, will kill you. That will mess you up as a trader. You will never be consistent. You will always be liquidity. Makes sense in a moment. So let's talk what are people. So I'm gonna make a retail type of analysis, then I'll move to what I think is gonna happen. Basically a retail type of analysis is the type of analysis that we make as retail traders, basically support, resistance, trend lines and all of that, you know. So I'm just gonna get to that right now and actually tell you guys where you guys are wrong. Okay, nope, I'm not saying anybody's wrong, but I'm just going to give you a quick warning before you can make a conclusion in taking trades on gold. So currently a lot of traders have this beautiful support, right? Almost perfect, right? And some have this beautiful trend line. I don't know how y'all put y'all trend lines. I'm not a trend line trader. I've been there, but it doesn't work. So we have support and resistance traders looking at market moving up, right? They have their trades there, right? Where are their stop losses? Where are the stop losses? Right there, right? We have trend line traders, right? We have trend line traders believing that market is going to drop, right? Where are their stop losses? Right there, right? So there is so much liquidity in gold that it's gonna make you guys dinner, basically. Remember what I said liquidity is. Liquidity is basically money, aka stop losses, right? You buy here, you put your stop loss there. You buy here, stop loss there. Same thing, right? Same thing, right? I don't know how y'all put your stop losses, but same thing. This is like the overall way of doing it. So you guys have your stop losses right there. Bear in mind, this is money to these big financial institutions. This is money that they can take and put in their pockets. Stop loss, you enter, stop loss above your trend line and so, right? This is money that the smart money, the big institutions can grab and take and put in their pockets. Be sure of this. I don't care what you think. That's the truth. So this is money. This is money. Right? You need to know what to do before you enter. Now, we could have the first grab on liquidity and teasing that these manipulating these guys into thinking that market is going to move to the upside, break trend line, right? And the trend line traders will enter buying opportunities. And what do you think is going to happen next? Market will crash. Grabbing liquidity and putting these guys that bought here at a loss, right? Stop losses. Everybody will stop that. Or grab liquidity on these guys, right? Grab liquidity, or market can grab this liquidity first, right? Making these guys more confident that market is going to move to the downside, and then market grabs the last low, which is the ST creating a spring, right? Test of the spring and an aggressive move to grab liquidity, more liquidity. So this is the idea behind Wyckoff, for you to be able to identify key levels of interest, key levels of structure, key levels of entry and exit. So remember what I said in the previous video, that every time market starts to consolidate, there is market manipulation during that phase. Number one, they are closing off their previous trades. In this case, they're starting to close, they're selling their short positions, shifting them, accumulating funds to push prices higher. Where do they accumulate funds? From you guys, your stop losses, right? You start to get the idea behind Wyckoff. And this is where we enter. After the spring, we wait for the test of the spring and a break of structure to the upside. So some traders just go aggressive by entering at the test of the spring. Some are a bit conservative and enter at the final break of structure to the upside. Then we move. But overall, we chow big moves while waiting out for you guys to be stopped out. Impatient traders don't want to learn, traders who are too lazy to do the work, they get stopped out of the market before market actually moves to the upside. Now remember what I said an accumulation is. An accumulation is basically the manipulation of the lows to break structure to the upside. In simpler terms, stopping out early buyers. Those who bought here got stopped here. Those who bought here will get stopped here. Those who bought here will get stopped here. Those who sold here will get stopped when market moves. So basically manipulation of the lows to break structure to the upside. So it will be quite easier for you. In fact, it'll be favorable in your side for you to learn Wyckoff and start making money. Stop gambling. If trading was support, I repeat, I will always say this. I will always say this till I die. If trading was as easy as support and resistance, you tell me. If it's so easy, if it's truly revolving around what's the support and resistance, what's the problem when price comes to your support level, you buy, and then it moves, when it comes to your resistance you sell, and so forth and so on? What's the problem? If trading was like this, honestly, everybody could be a billionaire. Everybody. Do not be gullible or be fooled into believing that market price trading is as simple as support and resistance. There is no such thing. Where do you think that this information comes from? Where do you guys think it comes from? Let me show you something about this particular pattern you guys love. There's this particular pattern, double tops. In institutional trading, we identify these levels, these double top patterns that y'all trade, as levels of liquidity. We know that liquidity is being built up here, and what we simply do is when we see a double top, we know that traders are gonna start putting sells, right, with their stop losses above the double top. And what usually happens in like 80% of the time, market does not respect this. It simply gives you guys the hope, grab liquidity, then it moves to the downside. This is what usually happens. It's liquidity grab. And this is what we're waiting for as institutional traders, because we know that when market comes back at that point, we simply identify our institutional candle and then we enter stop loss super tight and then chow a bigger move than what you were anticipating. So learn to trade and stop gambling. There is so much more to trading than support and resistance and trend lines and your moving averages and your EAs, your IAs, your trading robots, or whatever you want to call them. There's so much trading. There's so much more to trading than that. So take the time to actually learn, digest what is happening. Trust me, you'll thank me later. You'll never be a millionaire. You'll never be a millionaire trading like that. You'll never make millions of dollars trading support and resistance and moving averages. You have to first understand what's happening with price movement before you can introduce any sort of strategy, quote unquote strategy, right? You have to know what's happening. You can never trade moving averages without first understanding price action. You'll never. So if you don't understand price action and you actually trading moving averages, the only thing you'll always be looking for are the crossings of moving averages. I've been there. I've done that. I know what I'm talking about. I've been there. The most useless thing that you can do is trade those things without understanding price action, because even indicators take their information from price. So if you don't understand what's happening with price, you will never understand these moving averages, whatever you want to do. So take the time to actually learn and progress in your trading journey. You will thank me later, trust me on this. So thank you so much, guys, till we meet again on the next video. So yet again, if you enjoyed this video, please be sure to like this video so that it gets suggested to somebody else who might be looking for the same information you were. If you haven't, be sure to subscribe to the channel, click the notification bell so that you get notified every single time I upload a video, because it will be helpful. So thank you guys. Thank you. It's been awesome.